Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Welcome back. Thanks for tuning in. I am standing in for Phil Tarrant today. My name is Alex Whitlock. Just thought I'd get started by just considering what a good time it is to buy. I personally believe that if you have the right approach to buying property, any time is a good time to buy. Looking at the markets carefully, doing your homework. But right now, with interest rates being down where they are, with the market just starting to move in certain areas, obviously it's a bit of a patchwork marketplace across Australia, across New South Wales and all the various other states. But just in general, it's a good time to buy. There's a strong sense of positivity around the property markets. You look at the auction clearance rates, they just seem to go from strength to strength. I think it's a lot of positivity around there at the moment. Joining me today, I've got a guest who has been down the property buying path some years ago. Her name is Sarah Kendall. She's a financial journalist. She's the deputy editor on SMSF Advisor. Sarah went down that path quite some time ago. She bought when she was fairly young and is now back in the marketplace and has just bought fairly recently. So I thought it'd be very interesting to have a chat and get some insights. Sarah, welcome.
Thanks for having me, Alex.
So just going back a few years ago, you bought property. You were fortunate enough to get some inheritance. You were fairly young at the time. How old were you when that inheritance came your way?
I was 22.
That's very young.
Yeah.
And so were you studying at the time or were you working?
I just finished university. So, yeah, obviously pretty sort of not knowing 100% about finance at that stage. But sort of, this amount of money sort of I guess, fell into my lap, through a death in the family essentially. And I sort of wanted to make sure that I did something good with it to sort of set myself up financially for the long term. So I guess, as someone who didn't know a huge amount about finance at that point, property is sort of the natural entry point, I guess.
Just going back, so this was, what year was this that this took place?
So it was 2008, which actually, turned out to be quite a good time to be in the market because it was just after the GFC. So property prices were very low and the government was quite keen to stimulate more property market activity. So as a first home buyer, you could get pretty generous grants at that point. I think the normal grant had been tripled in size.
So at 22 years old, without any sort of real experience, you would never have expect to be in the market having just gone through university. Given the fact that we were just on the back end of the GFC, to decide to invest in property, we'll talk in a moment about where you invested and what you bought, but to make that decision as a young person, to step into property when everything was kind of against property, you got the government putting incentives, and the reason they're putting incentives there is because people weren't buying and the market wasn't active. What made you decide to go down that path?
For one, I just wanted sort of somewhere where I could sort of, call home if I needed to. I think at that stage I wanted to travel quite a lot being in my early 20s, but I liked the idea of having a base that I could come back to in Australia, but also I guess something that could generate an income as well so that, whilst I'm traveling, I kind of don't need to worry too much about income that's coming in. So, yeah, it was, I guess it's sort of a fairly logical decision for someone that's 22, but yeah.
So you're from Sydney. Whereabouts in Sydney are you from?
So I grew up in the North Shore. I ended up buying a place in Redfern, so that was pretty unusual. Most of my family and friends kind of would have expected me, if I was going to buy somewhere, to buy probably somewhere on the North Shore or even in the more sort of gentrified areas of Sydney. And, there was a bit of concern about, you're sort of buying in an unsafe area and, it's not a particularly attractive place to live at that time. But I guess I've always been quite a, logical person. If I did want to spend that large amount of money to get into the property market, I wanted to spend it on something where I thought from an investment perspective that the values are going to go up. And Redfern, was one of the last inner city areas that hadn't been gentrified. So it just seemed logical to me that the value was going to increase quite dramatically.
It is such a brave move, particularly being your first move into property, particularly being 22 years old. What kind of feedback did you get from people when you said, I'm thinking about buying in Redfern? What sort of feedback did you get from sort of friends and family and people you knew?
A couple of my family members were quite supportive because of the investment side of it and thought it was a sensible thing to do with the money I'd been given. But certainly people my age were, sort of concerned that, I was going to have to walk around in this sort of neighbourhood at night and, if I've got this amount of money, wouldn't it be better to buy somewhere which I guess is a bit nicer? But I guess, yeah, from my perspective, I really believed in the sort of investment side of things. And I guess I didn't want to be swayed too much emotionally, because I think that does go on a bit where people sort of buy somewhere because they think it's, the cool place to buy, or they think, status wise, it's going to make them, I don't know, seem like a wealthier and more together person. But I think at the end of the day, if you buy somewhere where the values are going to go up, probably just prepared to take a bit of heat from people who are skeptical of why you'd want to buy there. Because at the end of the day, you're sort of the one that's going to be laughing when you're taking a profit on it.
I'll tell you that's just incredibly grounded. So the first place that I bought was, I was a bit older, I was about 28 years old, and I bought off the plan. And for people who tune in regularly, they're probably sort of familiar with my story, but I worked in Hong Kong and I worked on an investment publication. One of my clients was a developer, so I'd sell them advertising. It was a developer called Central Equity, which specialised in the South Bank in Melbourne. And I got to know the sales guys there very, very well, became good friends with them, and I would sell them advertising, and eventually I ended up buying one of the apartments. But the reason I reference this is this was on sort of the luxury side. It was, sort of a big fancy building. It got tennis courts, and swimming pools, and it was in a trendy area, a redeveloped area of sort of inner city Melbourne. And the emotional kind of path that took me down there as a very naive and a first-time investor was, what a lovely place. I looked at the model, I saw other developments they'd done. It's all very lovely and serene, and you do picture yourself, even though I was never going to live there, but you go through this really rather strange kind of sort of psychological journey of thinking, well, what a lovely area. And to have the foresight at 22 years old to not go down that path and to actually go, look, I see opportunity in Redfern. It is an area which is so well positioned in proximity to Sydney, and looking at other areas that have gone up in value. These are the few areas that is waiting for that sort of gentrification. I think is incredibly inspired. It took me several rounds of buying off the plan to actually go, hang on a second, I'm losing a load of money here in terms of my cash flow, because all these fancy lifts and all the other various facilities, I'm now paying for those through the body corp. So very, very shrewd. So when you bought, just tell us a little bit about the actual property you bought, and just tell me also about. You've decided you're going to buy in Redfern. How did you decide what you were going to buy?
So the place I ended up buying was a one-bedroom apartment. It was probably, the building was a few years old, but it was still pretty modern. And I quite liked that, I guess, not new build, so it wasn't outrageously expensive and there weren't too many sort of service fees in the strata and that sort of thing. But, some of the other properties I'd looked at were older style and they needed quite a bit of work done to them, and, possibly could have had strata fees in there for various upgrades that need to be done to the building. But this building was kind of just, had its stuff together, wasn't going to be a big drag financially. So I think that was an attraction. It was also really close to the train station, so it was a 2-minute walk, which I thought, was going to be certainly easy for me to get to work, but also, if I was to rent it out from an investment perspective, the proximity to transport was obviously going to be super convenient as well.
Yeah, big tick. So what process did you go? You've decided you're going to buy in Redfern. How long did you look at the marketplace? What channels did you go to sort of look and see, what you wanted to buy?
So I think it was it must have been online. I mean, it's going back a few years now, so I'm trying to remember whether online real estate buying was actually a thing, but I think it must have been sort of online, through sort of online property portals and that sort of thing. So yeah, I mean, I was looking in other areas of the inner city, like Surrey Hills. There was a studio in Centennial Park I remember that I was thinking about for a while, but I did just end up having that conversation of, it'd be nice to live in this lovely picturesque eastern suburbs area, but, buying a studio that doesn't have a very good resale value in an old building that needs a lot of work versus buying a modern, roomier one bedroom in a suburb that's on the up just seemed to make a lot more sense to me.
Did you visit many properties, actually go around and have a look, or was this one of the first ones that you saw? What was it that sort of, really sort of ticked the boxes for you with this apartment?
So yeah, there was about 3 or 4 apartments that I saw. I think for this one, it was just that everything, it was quite modern, sort of clean lines. And yeah, as I said, it's sort of, it seemed like everything's there, nothing really needing to be done. I'm not a big person for renovation. I probably don't have that sort of vision of, being able to look at an older character place and, see all the things I could do to it. Probably a bit more lazy in my approach. So I'm just like, great, if everything's there and I don't need to do anything, that's wonderful.
I've got, as you may know, myself and Phil, we've got a joint portfolio. and I have absolutely zero vision in terms of what can be done with a property. And Phil is completely the mirror opposite. He's very, very practical. He'll walk into a place and he'll look around. He'll go, yeah, you can move a wall there, and you can take a doorway through here, and you can open this up or close that off. He's just got that ability to kind of look, and immediately he sees almost like a kind of a sort of a filter come down over the property, and you can see what the potential is. I have absolutely none of that. It just doesn't exist for me. So I absolutely understand where you're coming from. Just tell us a little bit about the price of the property. What was the cost? What were they looking for?
It was, I think that they were looking for around sort of 330, and I think I offered just under that, so it was 320. So I had been in a couple of sort of bidding wars with other properties that I'd looked at that point. So I think I was probably, erring towards not sort of going, on lowballing, because I kind of just wanted to secure the property. And to be fair, I thought what they were asking was pretty fair. So I kind of just,
you went a little bit under.
Yeah, but not massively.
So you've gone through the process, you've purchased the property. I seem to remember that you said that you were able to buy this outright.
Yes.
So there was no need for finance. It was a pretty straightforward deal. What was the process thereafter? So was it vacant when you bought it, or was it currently tenanted, or what was the situation?
I think it was vacant, but there ended up being sort of a longer settlement period for reasons that I don't remember, but I think it was sort of around 3 months before I was actually able to move in.
And yeah, so you bought this with the first home buyers grant, you moved in. How do you find, so you'd obviously had these, sort of concerns, if not necessarily from yourself, but from your peers around the area. How did you find the area when you actually moved into it?
Look, it was a little bit, dicey back in those days. And I guess, being a young girl, it was a little bit confronting at various points, sort of, waking up to sort of people screaming various things on the street and that sort of thing. But, also like a lot of, areas that get a lot of hype for being, dangerous or whatever, it was a little bit sort of overhyped. Like I never actually had any problems with people breaking in or anything like that. And certainly I'd say for the first couple of years I was there, I was a little bit wary of sort of coming home alone at night. But, it gentrified actually probably quicker than I thought. So probably within 2 years of having bought the place, there were, bars and restaurants kind of opening up in the area. And by the time I'd sort of, sold the place sort of earlier this year, it was really just like a completely different area.
I think it's really fascinating. I think perceptions, misconceptions, the way we build stories into our own mind about certain areas and how dangerous they are, I think is really fascinating. And I think it's probably a little bit different. Obviously, I'm from England. Things are a little bit different here. In England, when you go to university, you tend to move to another town, to another area. And typically in universities in England, certainly when I went there in the early 80s, you were doing it on a budget, and so students didn't have a lot of money. There were no student grants, so you were really limited to the small amount of money you'd got. And I moved into an area in Nottingham. I moved from a reasonably sort of middle class background into an area called the Meadows in Nottingham, which was really very kind of poor area. And from people outside there was this sort of veil of fear about the Meadows. But you know what? You move into an area, you do learn to be a little bit more streetwise and to watch your back. And you know what? You had to be sort of conscious of the area you're in. But you also realise that it's probably, 10 times more frightening than the actual need to be cautious. And then you also realise that I think it's particularly grounding to move into an area where you may not normally choose to live. You actually get to see, sort of what life is from a slightly different perspective. And and you just learn a sort of a different set of skill sets. So I think it's, I think it was a very brave thing to do at 22 years old. Look, let's have a little bit of chat. I know that you've moved back in the property market. Look, let's look at that in a couple of minutes. Welcome back. We were just chatting with Sarah Kendall about her very brave move into the property market back in 2008 off the back of the global financial crisis. She came by some inheritance rather than choosing to drink it or to
There was a little bit of drinking, but mostly it was property investing.
But at a time when property markets were very challenged, when there was a lot of uncertainty, not only did Sarah choose to put it into property, but also to go into an area that she wasn't familiar with, investing in a one-bedroom unit in Redfern. Look, sitting here now today, Sarah, you held that property. You talked a little bit about, how, so your experience of living there. You've just now moved back into the property market fairly recently. Just before we get into the property that you've bought, just tell us a little bit about the journey for that one bedder. You moved in there initially, but then you used it as an investment property. How did you see that property appreciate in value, and what sort of income did it generate through that process?
So just trying to do a back of hand calculation about, the yields and all that. But I think it was sort of, for most of the time that I was living in the UK for about 5 years. So I sort of took advantage of that, the absence exemption that you can get for CGT. So, I was it was being treated as an owner occupier. And when I sold it, I didn't have to pay CGT, which was convenient. But so I think it was sort of around 400 a week that I was getting for that. So it was pretty decent yield.
That came pretty handy.
Yeah, certainly. Living in London definitely needed some extra pocket money on top of my salary. So, yeah.
So you bought the place for, was it 320 you paid in the end? They wanted 330, but you got it 10,000 below the asking price.
Yeah.
Back in 2008. When did you sell the property? When did you finally cash in on that?
So I subsequently got married. So I guess, even though it was my apartment, it was sort of my husband's and I apartment by the end of it. But so we sold it in May this year. And to be fair, I probably should have cashed out maybe a year before that. But I think my husband and I weren't sure exactly where we wanted to buy, and we were kind of a bit not wanting to kind of sell and then buy a year later and, didn't know what the market was going to do and whether it was going to go up and our money would be worth less. And we probably would have been slightly better off selling earlier rather than later, but you never know.
But picking the top of the market is, picking the bottom of the top is notoriously hard.
Yeah. But so, I sold it for $555. So, still made a pretty decent, about 175% profit on what I bought it for.
Plus with cash flow all the way through, because it was unencumbered, there's no mortgage on that. So
yeah, that's right. Yep.
Giving you a solid yield over those years, particularly supporting you while you were working, studying in the UK.
Yep.
What made you think, look, now's the time to cash in on this, and what were your plans moving forward from there?
Well, it had always been my plan to sort of hold the place for about 10 years and then look at sort of selling that and using the sort of profits from that to upgrade. And I guess it took a while for my husband and I to work out, where we wanted to buy and, if we were sort of both in the sort of position to buy where we had sort of, steady income and everything like that, because obviously at this point we are going to need a mortgage to get a bigger place. So, that was basically, but also I guess, now that the prices had gone down, sort of at the end of 2018, it was actually looking like a pretty good time to get back in the market, quite similar to the time that I was in the market for the first property actually, because the prices were very depressed and, sort of with the interest rates being lowered, obviously, again, quite a lot of good incentives for people who were able to access finance to get in there and get things at a pretty reasonable price.
I think the market is really interesting right now. I could just sense excitement from people who understand property investment. They can see the opportunity, but the property market is really about the masses. And most people at the moment, even though interest rates are incredibly low, are really very cautious. And, we've got auction rates are starting to pick up. You're seeing, some activity in the marketplace, but prices are still reasonably compressed. You've still got, some vendors with maybe unrealistic expectations. You've got some who are looking to, like yourself, who are going, oh, look, I need to sell now, so I can't afford to wait any longer. But I think now is a really good time to buy. I fairly recently bought on the Northern Beaches about 4 months ago, because again, and I bought an investment property rather than buy my own home, but I just sensed that in that particular area, I bought in Newport, and I wanted to buy something specifically for my portfolio that actually had a view out over the water, which is sort of quite rare in Sydney's northern beaches. And I found a unit that I actually managed to purchase for less than it was sold previously in 2016. So there's just that time. Wow. So I understand, I know exactly what you mean in terms of, and you've obviously thought, well, I've got really good growth in my Redfern property. And even though I'm not selling at the top of the market, the bigger opportunity really now by buying something and leveraging, there's a bigger opportunity for you to now to liquidate that asset and to buy something. So what area are you looking to buy now? Where's your focus?
So we're sort of looking at a few different areas that are we're all around sort of, 45 minutes from the city, because we just want sort of convenience for commuting basically. We did actually sort of have a little experiment of moving to the Central Coast for a year to see if we could sort of deal with the commute there.
So did you rent a place up there?
Yeah, we did, and rented out the Redfern place whilst we were doing that. But we did find it was just a bit too far, which is a shame because, the value you can get up there is amazing. You can get sort of, 3-bedroom houses with a swimming pool next to the water for sort of $700,000. But, you then have to think about, as a resale value, are buyers going to have the same issue with, I don't want to go that far to work and everything like that. So we then decided it's better to buy somewhere that's a bit closer to the city. So we were sort of looking around sort of up North Shore, Hornsby. We were looking sort of in the mid-western suburbs, so sort of between Strathfield and Parramatta, and then in the Shire as well. But we ended up sort of focusing on that sort of western corridor, basically, just because the transport links we found are really good. You know, there's a lot of action, I guess, around Parramatta as a sort of second CBD, and they're putting a lot of effort into, you know, improving the sort of culture and nightlife in that area, and also, you know, got a few different infrastructure projects going in with the metro and the light rail. So we decided that, you know, as well as the fact that the values there are really good for people that want to buy sort of a family size home, I think the investment prospects around that area are also really good.
Oh, absolutely. I arrived in Sydney in 2001 and really sort of, you know, that Western corridor has changed so much. I mean, at least in terms of sort of the demographic. I mean, it always has been a fantastic area to live, but I think just, you know, I think people who've lived outside there, people who've lived in the more expensive suburbs have recognised the opportunity, and the infrastructure that's gone into those areas is really supportive as well. So I think, you know, great location to head for. So obviously you had, you know, you're in a 1-bedroom apartment in a city previously. What kind of property was it you were looking for? Were there any sort of specifics you want? Was it a particular size block of land, or, you know, was it the size of the property? What was sort of your tick list in terms of what you wanted?
Yeah, I think it's the size of the property. So obviously, you know, like being sort of married and in my 30s now, I'm in a bit more of a different, you know, lifestyle than I was back then. So looking for more of, I guess, a family size home. You know, again, if I'm thinking of holding this property for another 10 years, I want it to be somewhere where, you know, can accommodate a growing family at some point. So yeah, looking for sort of around 3 bedrooms or 2 with a, you know, an option to build in a third. Land size, not really that fussed. When we were in the Central Coast, we had a massive backyard and actually found that the maintenance was pretty annoying. So, you know, a little bit of a yard, but not necessarily huge. So yeah, I guess those were the main things. And, you know, obviously proximity to transport again, just because, you know, the commute to work I've discovered is really just, you know, it does take over your life if you don't live somewhere convenient.
Let's have a chat. I know that you've found the property that you were looking for. Let's have a chat about that in just a couple of minutes. Welcome back. Thanks for tuning in. I'm catching up with Sarah Kendall. She's a financial journalist. She's been down the property investment journey now for some 12 years. Buying, you know, some years ago, 1-bedroom apartments in Redfern, and just recently has stepped back into the property market in the west, or the west, down the Western corridor. So you've been through the process. You've decided what you wanted for this particular stage of life. Tell me about the property that you've just purchased and how you found that, and, you know, what your sort of experience was with that.
Yeah, sure. So we ended up buying a 4-bedroom. It's a duplex, basically. So the previous owner had sort of subdivided a larger block into 2 properties. And we actually found that was quite a good, you know, we looked at a few different duplexes because the prices seemed to be a bit lower. But, you know, if the construction is clever enough, you know, you still feel like it's a big place and you get all the advantage of freestanding homes. So you don't, you know, not paying strata or sharing a land title with anyone. So yeah, it's a 4-bedroom. It was new build, which again, you know, appeals to my laziness, not having to do any work, because we did look at a few different sort of character terraces, but just decided that the amount of work involved in sort of getting those up to scratch would just be too much. So, and yeah, it's about sort of, it's in Auburn. It's about 15 minutes walk from the station, which again appeals to the sort of convenience aspect for us.
And I know that you sold your previous place for
$555.
$555. Yeah. What was the purchase price of the new property?
So it was $890.
$890.
Yeah, so we sort of we have a mortgage on basically half of it.
So that's pretty good. I mean, that's a very good value in terms of, if you look at the Sydney, you know, the average prices in Sydney, you know, for $890 for a 4-bedroom house is very, very good value. You've got a fairly small mortgage on that.
Yeah.
In terms of applying for a mortgage, how did you find that? Because the price, I know a lot of people I speak to at the moment find, you know, the mortgage process quite difficult, but
yeah, and I know, you know, on the sort of mortgage broking publications, they've been talking a lot about this sort of, you know, the focus on expenses, and that was quite an issue. And, you know, I found it a little bit odd, I guess, given the LVR that we were going in for, that sort of our bank manager was still so obsessed with, oh, you know, this credit card receipt doesn't match up with this. And it's like, okay, it's a $1,000 limit on the credit card. I don't think that's really going to cause me to default on the loan of any kind. So yeah, it was, I mean, definitely obviously an easier process for us than some others given the LVR that we did have, but definitely quite a sort of pernickety sort of focus, I guess, from the banks at the moment on, just really going into the detail of sort of what you're spending your money on and that sort of thing when they're looking at your bank statements, which I guess is quite surprising.
So when you came to look for this particular property, and I know you said that you were fairly flexible in terms of what you were looking for, and this was, 4 bedrooms is bigger than maybe the 2 to 3 bedrooms that you'd initially thought you'd be able to get for that price bracket. So that's good. What price was this on the market for, and how long had it been on the market before you managed to buy it?
So it was at auction originally and got passed in. I think they were sort of looking for kind of, early 900s basically at the auction. Didn't get that. I believe the bid that they the highest bid they got, the finance for those people fell through. So it was quite lucky for us. And again, we found that going for properties that had been passed in at auction ended up being quite a good strategy because I guess, you do get a lot of owners that go in with high expectations. They don't get the price they want at auction, and then they realise that actually they just want to kind of get this property off their books, and they're probably willing to accept a bit of a lower bid than they originally thought.
I find it so fascinating as the years go by, as the buyer, when you're working with an agent or an auctioneer, they are a master of illusion, really, and you will have the sense that there is enormous competition for the place because you obviously have an affiliation with it. Whether it's an investment property, and I don't subscribe to any of this, no emotion in terms of investment property. For me, property, whether it's investment or otherwise, there is an emotional element. I mean, a bit different when it's your own place. But, good agents, they just create this illusion that there is huge competition. But particularly going through the auction process, I've found over the years, first of all, when a property isn't going to go to auction, then that usually means that there is one buyer that they've not been able to drum up enough interest, and so they're going to work with one buyer and they're going to try and negotiate. So if you come in, you know that there's only one buyer in there. When properties have been passed in, then you're really in a strong position. And the thing is as well, the agent hides you from the vendor. And I've been through the process of selling property as you have yourself, and you are absolutely crapping it when you're selling a property because you're going, oh my God, there isn't going to be enough buyers, and is the market changing? And it's really funny when you're buying, you sort of feel like everyone's looking at it, everyone wants to buy. When you're selling, you're thinking nobody wants to look at my property and nobody wants to buy. So that's a great result, finding that when it had been passed in. Was there anyone else in there at the time, or did you find that the ground was there for you and your husband to go in and purchase?
Yeah, I think, given that they had this other buyer that basically had their finance sort of knocked back, we were pretty much, again, as you were saying, they do try and make it seem as if there are other people competing, but the vibe that we got was that we were basically it. So, we were in a strong position to kind of offer what we thought was reasonable, basically, and not have to worry about people coming in and undercutting us, because we did have a couple of near misses where, we were sort of, conducting this sort of silent bidding war over the phone with other buyers and, being pushed into prices that we weren't really comfortable with. So I'm glad that sort of those opportunities didn't work out and we ended up in this sort of property where we were quite comfortable with what we'd offered.
So even selling here today, for $890 for a 4-bedder in Auburn, I know that you're going to be speaking about this in 5 or 10 years' time, and you're going to be having the same story saying, oh my goodness, I cannot believe that I bought a property, because there's another area that has just got so much potential in terms of growth moving forward. Do you have a sort of a forward strategy as to how you're obviously going to live there, for the time being? Do you have any sort of plans as to how you're going to leverage off this in the future, or where your next steps may be?
So, I mean, it's always possible that we will sort of move overseas and use it as investment, similar to what we did for Redfern. So, because my husband's British, so there's a chance that we could sort of go back there for a while and, rent it out similarly. But yeah, I mean, I think, definitely just buy and hold for now, because I do think the characteristics of the neighbourhood, I think, are very similar to what I saw in Redfern. It's sort of, you can already see that there's a few kind of new builds going in. There's a bit of developer interest, and given the infrastructure that's coming in the area, I just think it's quite likely that the character of the neighbourhood's going to change quite a lot over the next few years. And it'll just be interesting to see what that happens, and hopefully I can pull off another good profit from it.
I have no doubt that you will do. And you're a financial journo as well. You obviously got access to a lot of information about the share market, about sort of a whole host of other investments. And you make a few investments. Do you buy a few shares? What other investments do you make?
Yeah, so I do have a share portfolio that I've been sort of gradually adding to the last few years since I have been working in financial services, kind of, getting tips off various people and that sort of thing. So I probably have a portfolio of about, 10 Australian shares plus a couple of international ETFs as well.
But and it's good to see, I think having balance, and the older I get, I do have some shares, and I do increasingly look now to balance my portfolio. I mean, I've got significant, through myself and Phil and also my own personal investments, have got significant weighting in property. I think, the SPI portfolio is worth middling sort of 7 million. I've probably got about another $1.8 million worth of property in my own portfolio. But I do feel increasingly that the shares do offer a good counterbalance, but there's just something very reassuring. I will always look first and foremost to bricks and mortar. I just think there's something very predictable about property. And even when, prices do, and if you buy well, you are not likely to be subject to any real fluctuations in property values. And if you're investing, as long as you've bought well and there's not any oversupply, it's really the cash flow that property gives you, gives you that really sort of stable rental. So
yeah, absolutely. You can sort of, you can get a decent capital gain out of it and a decent yield out of it. And yeah, you can be, flexible with how you use it, as I've sort of found, being able to be an owner occupier at various points and benefit from that, and being able to sort of, use it as an investment vehicle and an income generator at other points in my life. So yeah, it's really a versatile investment. And, obviously if you have the opportunity to go into the market, a very valuable one has been for me.
Sarah, it's been fantastic catching up with you. Really, I'm very grateful for your candidness about your story. I think it just highlights, at 22 years old, to have the composure not only to look at moving into a property market at a time when there was blood on the street, there was incredible negativity and incredible uncertainty, not only to go into property when many were fleeing, but also to move into an area which at the time, back in 2008, Redfern really was not an attractive area, and have the ability to see the potential, and to buy a unit and to have made, a solid return on that over those years, as well as a really, really solid yield. So I think full credit to you, and all the very best. I think that the decision you've made to purchase your family home with a view to, having a very smart view to the ability to add value to that just through gentrification of that area, I think is really impressive. Look, for everyone else, thanks so much for tuning in. Really, really enjoy having you here. Sorry Phil couldn't be with you today. I'm sure he'll be here next session. And we love hearing from our listeners. Some of the best stories that we get are from people who tune into the podcast. If you've got a story, it doesn't matter whether you're starting to invest, whether you are thinking about investing, or whether you've got an enormous portfolio and you want to talk about it, do get in touch. We love hearing from you. Phil will bring you on the show. We'll have a chat and we'll find out what your experiences are. You can reach us at editor@smartpropertyinvestment.com.au. Don't forget, do check out all the other podcasts. Do leave your ratings. Do encourage other people to listen to it. Do promote it. And we do like to hear from our listeners. We very much value your feedback. I'm your host, Alex Whitlock. It's been great with you. Don't forget to check out the podcast on smartpropertyinvestment.com.au. Thanks for tuning in.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.